Earlier this hour, Apple Hospitality REIT rang the opening bell to celebrate a decade as an NYSE listed company. Justin Knight, Apple Hospitality CEO, joins me now in studio after, of course, the company rang that opening bell. Justin, congratulations and welcome.
Thank you so much.
Great to have you here at the stock exchange, and walk us through the past decade, what that has been like for your company.
Absolutely. Apple Hospitality has been in the hotel space for 25 years. We have one of the largest portfolios of hotel assets for a hotel real estate investment trust, 220 hotels across 37 states, 85 markets. Over the past 25 years, we've seen a lot of development in the hotel space. And having survived now multiple economic cycles, we've refined our strategy in ways that have really enabled us to outperform over that period.
And where is the company going from here? What does the next decade forward look like?
We're excited about the future. We have a wonderfully strong balance sheet. We have a strong portfolio, an experienced team. And in hospitality, over the past decade, we've seen a shift in consumer sentiment towards experiences in travel, which we anticipate will benefit us going forward.
Interesting. What does the environment there look like in terms of how you're looking at it versus what's happening here with the market?
It's interesting. There's been a lot of volatility in the market, reflective, I think, of some macroeconomic uncertainty. When we look at the fundamentals of our business, we continue to be very well positioned. Our customers continue to travel, both business and leisure. There's very low supply growth in the industry. And again, given the broad diversification of our portfolio, we see ourselves as being exceptionally well positioned.
Yeah, for our viewers watching that are not maybe perhaps as familiar with your company, what would you tell them?
It's interesting. We have chosen to invest in hotels that appeal to the broadest set of consumers, traveling both for business and leisure. Mm-hmm. Our hotels are rooms focused, they run high margins, and we've diversified our portfolio across a broad variety of markets, which creates an element of stability to our performance over time. Like I said earlier, we've been in the business for a long time. We've survived and thrived through multiple economic cycles. And the strength of our portfolio, combined with the brands that we're affiliated with that drive significant number of customers to our hotels, and the strength of our balance sheet, really have differentiated us from our peers.
Are there seasonal times of the year that are stronger for your company as we head into these summer months?
Absolutely. So, first quarter of the year tends to be a softer quarter from an occupancy standpoint. Coming off the holidays, people tend to stay home. But as we hit spring and run into summer, we see people traveling more for business and leisure. Occupancy in our hotels increases. We're able to drive stronger rates, and those stronger rates flow through to the bottom line.
Interesting. And in terms of what the future holds, we talked about this next decade here, but of course, the stock exchange always happy to welcome you. And for the people watching who might be shareholders, what do they need to know?
It's interesting. There's a lot of noise, and as we highlighted, some of that has been reflected in share price recently. We see ourselves as being incredibly well valued. We're paying a dividend yield above 8% today. That yield is fully covered from cash flow from our properties, and the backdrop continues to be very strong for us.
Justin Knight, he's the CEO of Apple Hospitality here at the New York Stock Exchange after ringing the bell. Justin, thank you.
Thank you. I appreciate it.